Hello, hello, and welcome. Today is Thursday, October 13th, 2022, and what an anomalous type of day that we've had today. Coming off of a 52-week low, bouncing over 2%, and just shooting for the moon doesn't happen often, guys. It happens probably once every decade or once every 2 decades. In fact, somebody had posted an actual statistic on this, data on this. I think it happened 3 or 4 times going back to the 60s. And so this is definitely not one of those days where either side, if you won money or lost money, you should celebrate, feel too good or feel too bad. And let me explain why. If you lost money, you probably had a system in place that didn't work today because today is an anomalous day, or you traded a particular instrument, or you had a range between your stop and your profit target that was not conducive of the type of day that we had. So if you lost money today, this is an anomalous type of day, so don't feel too bad. But if you made money today, you shouldn't be celebrating either. So sorry to burst bubbles. I want people to be happy and to celebrate, but on a day like today, if you caught a run, I mean, you just caught it. If you did that, you probably did very well if you held on. So until the close of the RTH day. In any case, before I jump in and do a few demos of what happened in the price action harvester automated system with the variety of instruments, I wanted to point out something that there is a common misconception about. So what I have on the chart here are the indexes. So I have NQ futures, ES futures, YM futures, and RTY. I wanted to print this or plot this all on the same chart just so that I can give you an example of how price doesn't move exactly the same. And a lot of people think that it does, so that if you made money on NQ, then using the same exact system, you should have made money on YM and RTY. Okay. Now, besides the point that only 3 of these are $5 a tick, and one of them is $12.50 a tick, so the ones that are $5 are NQ, YM, and RTY, but $12.50 a tick is ES, price doesn't move exactly the same between these various derivatives here, guys. So let's take a look. A clear, quick example is, I want you to see my crossbar here that I'm sort of moving around here. I'm going to point this to 7:19. Okay, the time is 7:19. That's Pacific Standard Time. I am in Los Angeles. So let's look at the NQ. Okay, I'm gonna grab that open on that red bar. Everybody's got a red bar. That's the same. And boy, do these things look similar, right? These moves. If you look at these beautiful waves that it's making, they look pretty darn similar, don't they? But they're not exactly the same. So let's go and compare 7:19 on the NQ, which is the very top panel, and compare that price to 742. Okay, so I'm at the open. I'm at 106.79.75. I'm going to put my crossbar now on the 742 AM price. So you'll note that it's almost exact. In fact, it may be exact. 65. It is exact, right? Between 719 and 742. So the close of the screen par at 742 is exactly what it was for the open of the 719 bar, right? It's 10665 exactly. Okay. Now I want you to compare that to RTY. All right. Here's RTY. The 719 open, still a red bar, right? The 719 open is 1678.3, right? 1678.3. Now, what is it at 742? Here's 742, 1671.6. They're both green bars at 742. They're both red bars at 719, but they're not the same, right? So if you have any type of a swing play in your system that you're looking at, these prices are going to be different, and you're going to get a different type of signal, okay? And so this is something to bear in mind, okay, guys? They move similarly, but not exactly the same, okay? So that's something to bear in mind. Now, okay, so in most of my videos, I demonstrate on a day like a volatile day like today, special operations. Today, I'm going to demonstrate special operations as well, but first, I'm going to demonstrate accumulation breakout, the other very cool strategy that's been available since the release of version 5. And so with accumulation breakout, you can essentially make it conservative or you can make it aggressive, your choice. If you wanted to make it conservative, you just have to keep the volume factor pretty high. If you want to make it sort of more liberal and look for more potential opportunities, then you would have to reduce the volume factor. But let me take a step back and explain what accumulation breakout is looking for. Accumulation breakout needs to find a setup first. It needs to find a channel. So it's looking for a price to initially channel, and then when it breaks out or breaks down from that channel, accumulation breakout tries to take advantage of it, but it's not as simple as I just made it sound. There is an algorithm that's involved there that it's looking for a particular set of circumstances to take place before it actually executes the trade. One of those circumstances is the volume factor. So the strategy accumulation breakout is in fact studying or observing what's happening within the channel. So it is essentially recording what the volume of that channel, or I should state the average volume of that channel had. And then what it's doing is when it confirms the price breakout, it doesn't immediately do that. When it confirms the price breakout, it will also study based on whatever information you input here for volume factor long and volume factor short. It's going to observe the volume of that breakout. Okay, so if I put, let's say, just to make the numbers easier, if I had 2 here and 2 here, then what it's going to tell the system is, system, make sure you have at least twice as much volume as the average volume that you observed in that channel. However, that's going to make it conservative, right? That means you have a serious breakout happening, right? You have twice as much volume coming in than within that channel. So that's a pretty aggressive, good breakout. But let's say you want it to be more liberal, sort of more, you want the system to look more, for additional setups. Well, you just reduce that number. So what I'm doing here is I'm telling the system, if you have 80% of the volume in this price breakout that you had in that channel, then go ahead and attempt to execute or enter a trade. Okay? Again, I'm still making it a bit easier than the actual algorithm, but just to give you a synopsis of what's happening, that's what's happening. So that's what I'm going to do here in this example. Why am I being more liberal when it comes to the setup? Because I've seen volume. Okay, I just said volume. I've seen volatility, and the VIX is still over 25, and I am seeing this thing explode higher and lower and lower and higher. I want to take advantage of it. Okay, and so the way I'm going to manage that is I'm not going to just be a cowboy about it. I'm going to have what? I'm going to have controlled aggression. I've said this in other videos. Controlled aggression. Okay, so I want to be aggressive, but I want to control my aggression. I'm going to do that via money management, and I'm also going to do that via my risk manager. So let's go ahead and look at the money management. So what I'm saying here to the system is, system, if you have $500 or more in net losses during that session, then stop looking for further trades when the trades are flat at the close of the bar. And I'm also telling the system, if I have 4 consecutive losses, for the system to stop looking for further trades. Okay. Conversely, I'm saying that if I have $5,000 or more in net during that session, then the system should stop looking for further trades when the trades are flat at the close of the bar. Now, I'm going to control my risk here. Obviously, the risk per trade is my stop. So I am looking at 40 ticks here. Why? Because I'm going to do a couple of $5 tick ones. I'll do YM and then I'll do RTY. So I'll do the E-mini Dow and then I'll do the E-mini Russell 2000. So I'm going to put 40 ticks for that. At $5 a pop, I am talking about $200 worth of risk. In essence, if I have 3 consecutive losses, guys, let's say I turn on the system, I enable it, and the system starts looking for trades. If I have 3 consecutive losses, that would be $600 plus slippage, right? Because it's 200 plus 200 plus 200. Well, that would automatically exceed that $500 number, because 600 obviously is bigger than 500, and so it's going to stop looking for further trades even though I had 3 consecutive losses. It's not going to wait for this, because these statements here are or statements. Okay, if this happens, or if this happens, or if this happens, it's going to stop looking for further trades. So I'm going to put my profit target at a lofty 700. And when it comes to volatile days, usually I have a very high profit target. And for me personally, in my opinion, it is between 500 to 700 ticks is what I'm looking for. If there is, awesome volatility that I'm seeing in the marketplace when I'm looking at the VIX or the VIX futures, that during that initial hour, you'll note that I'm starting my looking for trades at 7:31. That's my time, Pacific Standard Time. I'm in Los Angeles, so that's an hour after market RTH market open. And so I'm looking for 700. And then finally, I have my flatten everything time, which is 12:59, so 1 minute before RTH close. So the system's going to flatten everything up, down. It's going to flatten it. So essentially, for any trade that I'm entering, essentially I have 3 exits, right, in this setup. I have my stop, I have my profit target, and then I have my flatten everything. Those are my exits, okay? So I'm going for a home run in essence. So if I lose, I'm going to lose in a controlled fashion. Essentially, I'm going to lose, potentially I could lose 3 in a row and I'd be down 600 plus slippage. Or I could hit a home run, or I could be flattened out. So essentially I'm being aggressive, but I'm controlling my aggression. Okay, so let's pick an instrument here. Let's go with YM first. And then let's make sure we do have slippage. A couple of ticks I think is fair. All right, let's make sure that we can isolate it for today. So let's see, and then add this. It's not 12, it's the 13th today. Make sure that's Thursday, correct. And we are going to look for both long and short trades, okay, for accumulation breakout. And then let's make sure that everything else is in place. And it looks like it is. We're not going to use move stop or modulate break even because we're not going to be defensive on this. We've seen volatility and we want to take advantage of that volatility. When we think that there's low volatility, then we get defensive, okay? Because then we could be entering chop territory. So you want to get defensive, and by defensive I mean we want to quickly book profits and do things like break even plus or do move stop, etc. And I have other videos that explain when I've deployed those 2 defensive strategies in place as well for move stop and modulate break even. But let me go ahead and see. By the way, we're doing 1 contract as I do in every single one of these videos. It's always 1 contract. So let's go and run it for YM. And let's see what happened. All right, so it had a couple of trades, 1 winner, 1 loser. Let's quickly look at the chart. So the first one directionally went long. Again, we had both long and short enabled, but it caught the strategy, triggered a long trade. That took a quick loss. So on that entry bar, it took a loss, but the next one was a winner. It never looked back, it looks like. It hit the profit. There's still plenty of room there. And by what time is that? Around 10, I'm going to say 28 or so. Let's just give you an exact time here. 10:28, and it basically hit the profit target. So if I had a higher profit target, it was going to go higher too, much higher. All right, so let's do RTY. That's another $5 one. So the risk is not changed because it's still 40 ticks. I'm not changing anything, okay? Everything is the same. So let's go and take a look what's going on there. So that looks like it had 2 trades again. Same scenario. So it looks like first one's a loser, the second one's a winner, and that hit the profit target, and it had a little bit more. Actually, it did not have any more room. Actually, it did not hit the profit target. I take it back. That one was flat and everything. So we exited. That was one of the 3 exits. So we did not hit the 700 tick profit target on RTY, but we flattened everything at 12:59. It got the signal, and by the open bar plus it added 2 ticks of slippage there. So those were the results. Look at the summary. Okay, that's thing. So let's do a little bit. Let's be more aggressive. So let's look at ES. Why am I saying even more aggressive? Because the ES is $12.50 a tick. So in that scenario, I'm going to drop this for sure. I don't want to take that kind of risk. I'll probably maybe 30 ticks. Okay, that's about what, 375 plus slippage, about $400. So what that means is if I take 2 losses in a row, that's going to hit about $800, 375 times 2 plus slippage. And that's it. That's it. That's going to take me out. That's more than 500 there. That's going to take me out. So I'm taking more risk with this one. And I'm going to leave this at profit. There is unlikely that I hit that profit target with the SPOOs, but this will take me out. Okay, so either my stop will take me out or this will take me out, or the two likely exits. This would be great, but that's very lofty. Okay, so let's see. That's Thursday. Let's run it. We still have 2 ticks of slippage. Once it loads, I'll show you. So we still have 2 ticks of slippage right there. That took 1 trade. That was right off the bat. It's like I said at the onset, guys, to get one of these, okay, and it goes in your direction on a day like this. I mean, I wouldn't consider this trade a hero trade. This is not, it flattened everything, so it did not hit the profit target. That doesn't surprise me. 700 is huge for the SPOOs. That's more like for the $5 tick ones. This is 12.5. So that's what that was for the SPOOs. Let's take a look at another $12.5 one. HG, copper. Let's see what that's going to do. That's another one-hit wonder. Okay, so I would not be very impressed still with this because, like I said, on a day like this. All right, now let's take a look at special operations. So that was accumulation breakout. Special operations is even more aggressive than accumulation breakout. Okay, so special operation is going to be more price sensitive. It is not looking for a channel. Okay, it is looking for another set of rules, and it's a different, very different algorithm, but it is still high. It's far more aggressive in my view than accumulation breakout. It is the most aggressive strategy that I have. So we're going to do the same thing. Let's go ahead and do that whole process again. So let's go ahead and go with YM. And we're going to take about the same amount of risk as we did before, exactly the same. So let's do $40, $200. Everything else is the same. I'm not changing anything. Let's make sure we have slippage. And now I've turned off accumulation breakout, and because I've unchecked it, even though the time is there, there's nothing checked. But for this same time, I'm going to wait for an hour to go by, and then bi-directional, both long and short opportunities is what the system, I'm telling the system to search for. Okay, so I picked MYM, excuse me, YM. Not the micros. All right, let's make sure we still have slippage. Not that you can't use it for the micros. I'm just in this example not doing it for the micros. So let's go and run it for special operations for YM. All right, 5 trades. We had 2 with accumulation breakout, 5 with special operations. As I was just noting, special operations is significantly more aggressive. Okay. So that first trade was a loser. The second one was a winner. The third one was a loser. The fourth one was a loser. The fifth one was a winner. So my losers are $200 each. That's flattened everything. And then we had those results. Okay. Just please remember, for any example that I run, whatever commissions that you have, multiply it by the number of trades and then subtract it from the total net profit. So if you had $5 that you were paying times 5, that's $25. Subtract that from $4,040. You have $4,015. Okay, so let's run it for some other ones here. Let's in fact do the same exact things we did before. Not the Turkish lira. I want RTY. All right, so we are still running special operations. We still have 2 ticks of slippage. Let's see what RTY did. RTY also, if I recall correctly, had 2 trades. This also had 2 trades in RTY for special operations. But as demonstrated with YM, it had 5 trades versus YM for accumulation breakout had 2 trades. So loser, winner. So it's about the same, almost the same. So let's go ahead and run it for, let's do, I believe we did ES next. And then we did HG, if I recall correctly. And let's see. Yeah, I'm not going to take that kind of risk. So let's reduce that to 30 for ES because it's $12.50. So let's run it for ES. We still have 2 ticks of slippage. Let's see what ES did for special ops. 1 trade again. Yeah, so it caught it obviously a bit sooner than it did for accumulation breakout because special operations is not looking for a channel. So again, yeah, a day like this is kind of like, you want to get days like this, you know what I'm saying? Like you're hoping for that, but guys, the truth of the matter is, there's nothing to celebrate over, in my opinion. you catch a trade like this at the right time. I mean, I don't think, a Medal of Honor or anything like that should be given. You're not a hero, in my opinion, to catch a trade like this, because it was just the day. Okay, the day was kind of an amazing, anomalous day. Okay, so that's the spoos that had one trade, obviously a big winner. So let's go ahead and see HG. That's still $12.50. So 30 ticks, about right for copper. Copper looks like it had 2 trades. There you have it for copper. Excuse me, I passed by it really quickly. The first one was, it entered short on the first one right here. It was, it was wrong. And so it got stopped out. Took a loss on that one. So let's take a look at copper, okay? Just to get an idea as to, where it was. Okay, it's coming down. So this is what the system would have seen right here, right? This is what the system would have seen right here. So this and then this is what the system is seeing, and that was wrong. So it took off, and like copper, everything's taken off, and so at least everything that I just showed you is taken off. So there it is. The first one was a loser, the second one was a winner, and those are your hypothetical results. So we just demonstrated accumulation breakout. We demonstrated special operations. If you have any questions, would like to walk through my thought process as to why I deployed accumulation breakout, how I think about that, why I deployed special operations, how I think about that. The best way to do that is to request a Zoom demo with me, and I'd be happy to share it with you and also answer any questions you may have. You can request a Zoom demo from my website at pinnaclequant.com. Until we meet, take care and God bless.